That's why true planning is really the key to true long-term wealth, in my opinion, when you're working with an advisor. So we sit down and look at it from different asset classes, like I mentioned before: ETF, stocks, bonds, mutual funds, annuities, CDs, real estate if they have it, cash in the bank, all those types of things, to really make a true picture of, hey, when the market's good, here's the upside potential that you truly have with the asset allocation that you have, and here's the risk that you're taking by having it all or mostly all in this one asset class. And, people will try to demonize the stock market, or people will try to demonize annuities, or people will try to demonize the banks. And the answer is
The Mark Biggs Show.
What's up, everyone? Welcome back to the Mark Biggs Show. Another solo episode for you today. Want to dive through some hot button economic issues that have really been at the top of our brains in our office and the top of our clients' brains, and that is the word tariff. I think a lot of people didn't even pay attention to what tariffs were, or maybe even known what they were prior to the last couple of weeks in our political climate here in the U.S. And so the main thing that I want to dive through today is, what does that mean for the average investor? What does that mean for the average person trying to save for retirement? What does that look like from people that are working with advisors? All those types of things. So peeling it back to kind of the basics, when a client comes in at Biggs Financial, what we do is to really try to look at their assets from three different scenarios, and that's going to be performance, stability, and then tax efficiency. And so, a lot of people, when they come in, they just look and say, oh, well, I've got, all these different mutual funds, or I've got all these different bank accounts. I should be well diversified, and I should be protected against, volatile environments in the market and things like that. And what we've really found is that really hardly ever is actually the case. And when you sit down and you actually go through the analysis with people and show them what true asset allocation looks like and how they truly should be well diversified, so that in times like this, where the market's been super volatile as it has been over the last couple of weeks, they don't panic. They don't freak out, because what market volatility does for most people is it incites panic. It incites fear, which means people usually make rash decisions, and that usually ends up meaning it costs them money. So what we really want to do is dive into, what does true asset allocation look like for the average investor? You don't have to have $10 million or $20 million to, practice these principles. They work for all scenarios, but every scenario is different. And that's the whole point of working with a holistic advisor, instead of somebody that just can sell you one specific product. Because if that's the only product they can sell you, then of course every problem that you provide to them, the solution is going to be whatever product it is that they can sell you. So basically, we'll sit down, we'll go through what they have, and from an asset allocation standpoint, does that look like ETFs and bonds and stocks and mutual funds, annuities, CDs, cash in the bank, real estate, all these different things. Whereas most advisors will just look at, oh, give me your stock portfolio, let me tell you what I can do with it. Or, insurance agents will say, oh, just let me slide it over here into this annuity product, because that's the only thing I can sell you, and you're not going to lose any money and everything's going to be fine. Well, that's not always the answer. And so in times like this, where the market's been super volatile, that's really where you see whether or not the true planning has been put in place up front. Because our clients, while they do have money in the market and are experiencing loss in the market, that's not where all their money is. And so when they go to bed at night, they know, hey, we planned for this up front. We made sure that we protected a piece of our assets, so that in times like this, we don't feel like, the sky's falling, because only a portion of our assets are exposed to risk. Whereas, if you were only in a stock portfolio, which I've seen clients over the last couple of weeks come in and have initial consultations and meetings, all their money are in stocks and bonds, and they're just getting crushed right now, for lack of a better term. And whether or not you have $50,000 or $500 million, watching those numbers plummet at the rates that they have been over the last couple of weeks, it stings. And so that's why true planning is really the key to true long-term wealth, in my opinion, when you're working with an advisor. And so when we're sitting down and we're deciding what true asset allocation looks like, and clients see it in front of them in real time, a lot of times they really do see, well, I thought I had true diversification because I have 15 different mutual funds. Well, what you didn't know is that 10 of those 15 mutual funds have pretty much the same top holdings in all of them, so you really don't have any diversification at all. So we sit down and look at it from different asset classes, like I mentioned before: ETF, stocks, bonds, mutual funds, annuities, CDs, real estate if they have it, cash in the bank, all those types of things, to really make a true picture of, hey, when the market's good, here's the upside potential that you truly have with the asset allocation that you have, and here's the risk that you're taking by having it all or mostly all in this one asset class. And, people will try to demonize the stock market, or people will try to demonize annuities, or people will try to demonize the banks. And the answer is none of those, in my opinion. The answer usually is a combination or a blend of all of them, because they all have, their positive traits in their own right. Some of them have liquidity, some of them have no risk, some of them have risk, some of them have where you can only get to certain portions of it over certain periods of time. So using all of these tools to your advantage is what a true diversified portfolio looks like. And so there's two sides of it. So when market volatility is happening right now and clients in the market are experiencing loss in their funds, a piece of it's protected. So they're comforted by that, because not all of their money is exposed to risk. So if they need to take a distribution, they have money that has been protected and they can pull from it because it hadn't lost anything. But then on the other side, which is where a lot of people in the insurance world, they preach the market's the devil, you can lose all your money, blah, 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 blah. The other side of this problem is what happens in all the data points in history when the market has a 10, 15, 20% correction like we're seeing over the last couple of weeks. It inevitably goes back up because the American economy is here to stay. I believe in the American economy long term. And so if you do believe in that, you should know from history repeating itself that the market will come back and it will rebound. So the other side of that conversation is, well, if all my money's in a protected spot, how do I capture when the market goes back up? And that's the whole point. So if you're not, allocated properly there either, then when the market inevitably does go back up at some point, you're not going to be able to capture those earnings. And so that's the beauty of having true asset allocation, where there is some money exposed to risk in the market, so that when the market rebounds, you're going to capture a lot of that upside. Whereas if everything is in some type of protected CD or, money market account or a annuity or something like that, you're not going to be able to capture all that growth when it comes back. And so that's why where we're at, we do our best to really dive into clients' portfolios and make sure that they have true diversification and not just, like I said before, 15 or 20 different mutual funds. So that's what we believe is the key to true long-term success with your assets, is planning, using a holistic planner that actually looks at your situation and your assets and your family's goals and income and all those different things to see what actually makes sense for you, instead of just saying, oh, well, I'm licensed to sell this one product, so I'm just going to sell you that because I can convince you that it works in your situation every time, regardless of who you are or what you've got or what you don't have. And so that's where we really feel like we separate ourselves from everyone else that does what we do, is being able to truly explain to you in layman's terms and not use big fancy words about things that you can't understand or whatever to make us seem like we're smarter than we really are. At the end of the day, it's all about having, common sense solutions that work for you, your family, and your family's goals. And so I think a lot of people in the market right now are experiencing that oh shit moment, for lack of a better term. I really didn't plan before. My guy told me it was good, or my gal told me it was good, and then now I'm not feeling that. So it incites fear, it incites knee-jerk reactions, which in turn costs you money. So that's why we feel it super important to plan on the front side for times like this, and for when periods in the market are good, because when the market's good, you need to capture those earnings and keep those best you can. So it's a two-folded question, not just protecting myself when the market's bad, but when the market's good, I need to be able to capture that and capture those earnings for my family. So tariffs over the last couple of weeks have caused a lot of problems in the market, as you can see. Long term, I think it's going to be great. And I think the American economy always holds true and holds strong. So whether or not this lasts 3 months, 3 weeks, or a year and a half, I do think the American economy will rebound, the stock market will rebound, and long-term success in the American economy is on the horizon, in my personal opinion. I'm a conservative-leaning policy person, so I believe in some of the policy things that are being done in Washington, although I did kind of expect that some volatility would come with it, just because it's a shakeup of things from how they were before. And anytime that happens, you're going to have, you're going to have volatility, and you're going to have times where things are just unstable. And so I think, the big companies that are here in the American economy are staples. They're here to stay. And I think the economy as a whole will rebound. But once again, no one can predict the market. It can be 3 months before it rebounds. It can be 3 years. It can be a year and a half. Who knows? But regardless, if you've planned properly up front and having a holistic advisor in your corner that is paying attention to these things and can make the decisions to reposition assets when need be, and to be confident in the plan that was placed up front for downside protection when the market's like this, but then also we're ready to capture some of these earnings when the market does come back. That's the key. And I think that, if you really sit down and look at the plan quote unquote, that you have in place, that will tell you really quickly if you're working with an advisor that cares about you or you're working with somebody that can sell you a product. And so that's the thing that I urge you to do, is sit down and look at what you have and kind of think to yourself, do I have true asset allocation? Do I have true diversification? Or do I just have a couple products somebody was licensed to sell me? That's not true planning. And that's not going to protect you in times like this. And it's not going to protect you in times when the market's good. So take the time to sit with someone and meet with someone that has your best interest at heart, and is, qualified by law to do so, being a fiduciary. So I just want people to understand that at the end of the day, you need someone in your corner that is not just a product pusher, that is prepared for when times are like this, because I'm not panicking. My clients are not panicking because we've done the proper planning up front to protect them in times like this. And then when the market does rebound, they're going to be in a position to capture a lot of those earnings too on the way back up. So anyways, tariffs, short term, going to be a little bit volatile. Long term, the American economy will always prevail, in my opinion. I believe in that wholeheartedly. So, we're not panicking. We're not selling all these things off and all those types of things. We're going to ride this out, and we're excited to see what happens in the long term, because once again, I believe in the American economy and I want to see Americans succeed. So thank you for listening to me ramble today. If you would do me a huge favor, if you would like this podcast, wherever it is that you listen to it, Spotify, Apple Music, YouTube, wherever, share it with someone and make sure you're following and subscribed on YouTube. That would mean the world to me. Once again, like, share, follow, subscribe, wherever it is that you listen to this podcast. I would be so grateful. Thank you so much for tuning in today, and we'll see you again next time.